I am Ajit Gunawardhana. I am an accounting teacher. Now I am going to discuss about EPF and ETF adjustment. For EPF, both employee and employer give their contribution. But ETF, only employer give their contribution. Based on the EPF Act, employee 8%, employer 12%. ETF only employer 3%. Then see the example 1. Read and get idea. It has not given trial balance. It has not recorded. Percentage same 12% employer for EPF, employee 8%, ETF employer 3%. It has given gross salary of employees of the business 8 million. Value should be calculated based on the gross salary. EPF and ETFs. Right, move to the EPF part. Contribution of employer 8,000 into 12%, value equal 960. Employee 8,000 into 8% equal 640. ETF also should be calculated based on the gross salary 8,000 into 3% equal 240. Then when we are going to record in the ledger accounts, right, first one think about when business going to pay salary to the employees, net salary should be paid. Contribution of employee should be deducted from gross salary. As a salary, net salary should be paid to the employee. Therefore, gross salary 8,000 minus EPF contribution of employee 640, net salary equals 7,360. When we are going to record in the ledger accounts, there are 4 steps should be applied. First one, net salary should be recorded. Second one, EPF contribution of employee should be recorded. Third one, contribution of employer for EPF should be recorded. Fourth one, EPF contribution of employer should be recorded. There are 6 ledger accounts should be prepared. 6 ledger accounts. Salary accounts, EPF expense account as well as EPF payable, ETF expense and ETF payable. There are 4 steps should be applied. 6 ledger accounts should be prepared. First one, net salary should be paid to the employee as a salary with cash. Therefore, cash account credit, salary account debit. Second steps, EPF contribution of employee also part of salary. Therefore, salary account debit 640 and EPF payable account credit. EPF payable. Then third one, EPF contribution of employer, that is not part of salary, that is another expense of the business. Therefore, EPF expense accounts debit, EPF payable account credit. Third steps. Then fourth one, EPF contribution of employer, ETF contribution of employer, also another expense, cannot be deducted from salary. ETF expense account debit, ETF payable account credit. There are 4 steps should be applied. Right now, there are 3 expenses, salary, EPF expense as well as ETF expense. All the expense accounts should be closed, profit and loss. And EPF payable, ETF payable, those are liability accounts, should be carried down. Right, what is the summary? It has not given trial balance, therefore it has not recorded. If it has not recorded, there are 4 steps should be applied. Net salary, that is the first one. Second one, contribution of employee for EPF. Third one, contribution of employer for EPF. Fourth one, contribution of employer for ETF. There are 3 employee related expense, 2 liabilities. As a salary, net salary should be paid to the employee net salary equal gross salary minus EPF contribution of employee